Buy, sell, or hold. Let's take a look at Tesla, Nvidia, Apple, and Palantir, four of the most widely held stocks. And I'll show you my thoughts on where those stocks are likely to go in the short term and longer term. And in doing so, I'm going to teach you how to read charts in a quick, easy manner. Ultimately, you can read a stock chart in 10 seconds or less if you understand some simple concepts. So we'll go through those now. All right, let's dive into the charts. First one here is Tesla, and you can see that it's obviously had a major sell-off, moving from 480 down to 240. So that's a 50% haircut. All right, first thing we have to understand is the trend. On the daily time frame, the trend is down. Now notice how I've drawn that trend line. I've cut across the tops. All right. Notice also that we are far below the trend line. That means the stock is oversold. Anytime you run away from the trend line, up or down, you are oversold. That makes it likely that the stock will bounce back in the short term. So to understand the short term, we need to go to the short-term chart. Let's do a 1 month, 60-minute chart. And here you can see, I'm going to do the same thing. I'm going to draw a trend line. And you can see that this trend line was broken this week. However, it is still stuck under this resistance level. So if the stock can break through 250, then it should start that short-term comeback. Does that mean the stock is out of the woods? No. For the longer term, we are still suffering from heavy damage. So I think that in the short term, there's a very good chance we'll see it move from that 250 level, maybe up to 320, 340. That's a great trade if you're a short-term trader. If you're a longer-term investor, it's not likely that we're going to get back to these levels anytime soon, and here's why. Another simple rule: when a market runs up and then pulls back, it shouldn't pull back more than half of what it ran up. If it pulls back more than half, then the chart is broken. This is called the 50% retracement rule. So you can see that the pullback from here to here compared to the run up from here to here is like 80%. And that means the chart's broken, and that's why the sentiment stock score is pretty low. So basically then, I expect we'll see a little bounce back in the short term, but do not trade that until we break up through that 250 level. All right, let's move along to Apple now. So Apple, like most tech stocks, has suffered over the last few months, and we are in this downward trend, but there's a lot of volatility in the downward trend. Just like on Tesla, we are far below the trend line, and that means we will likely bounce back up to the trend line. So you can imagine that we're in the sort of the 220 range, and the trend line's at around 235, so there's a potential trade there. When do you take that trade? Well, it's a short-term setup, so we have to go to the 1 month, 60-minute chart. It could be the 30-minute, 15-day, doesn't matter. And here I can see the trend line, and I can see I'm far below it. Now on Friday at the close, the stock broke through some resistance on this hourly chart, and it did so from a rising bottom. That means there's optimism building, and therefore I think it's very likely that in the next week, it will move up from where it is now, 218, to somewhere around the 226 level. Now, does that mean certainly it will move up? Absolutely not. I want you to understand that I'm just giving you possible trades. Don't go out there and trade this with your own money unless you believe in it and you've done your own due diligence. I'm here to teach and show you some ideas that you can then look into further. I do think that there's a good chance, I'm going to say a 70% probability, that we'll see that stock bounce back. However, when it gets to this trend line, it's going to get stuck, and likely it will pull back. Now, if it pulls all the way back and goes to new lows, well, then the downward trend continues. If instead it pulls back, builds a rising bottom, and then breaks this downward trend line, then we're starting a better recovery. For now, only a short-term trade on the long side. Longer term, I do not like it. Let's do Nvidia. Now Nvidia, if you've been following my videos for a while, make sure you're subscribed to the Stockscores YouTube channel, because I'm doing this kind of analysis on a regular basis. I put out sell recommendations on Nvidia a number of times in the last little while. The stock has not done well, even though it was a great stock for the last 2 years. For the last 6 months, 8 months, it's been pretty dead. Where's the trend line? Draw a line from the tops. So start at the high, draw it across what we call inflection points, and there's your trend line. We are again some distance below. We were farther below down here, And right here on this day, you can see that we broke that downward trend when we were heavily oversold because the distance to the trend line was far, and that makes it likely that we'll see it move back up. Let's go look at the 1 month chart and we'll see when that happened. So here on the 1 month chart, there's that downward trend line. There's the break of the downward trend line, the build of a rising bottom, and then a breakup from a rising bottom. So that was a short-term signal that Nvidia was going to recover. But look, it has not done so yet. It has been stuck. It has not broken through support, so we're still okay. But I think you want to now wait for this little downward trend line to be broken somewhere in that $120 range, and then maybe it'll get a little bit of an upside move. The problem is it doesn't have a lot of upside to the trend line, because if I draw my trend line here, where's my trend line? Somewhere around 128. So you're buying at 120 to trade it until 128. Maybe it makes sense if you're trading the options or something, but I wouldn't say that that's a great risk reward trade-off, because buying at say 123 or 121 even, and having a stop in at support here at 114, the upside is not enough for the downside. And so that's why I'm not super eager to be trading Nvidia. Looking at the long-term 3-year chart, you can see that the long-term upward trend is way down here. So it could still fall all the way to 90. The shorter-term upward trend that was broken, that was one of our signals to sell for a long-term sell, and we're building falling tops. So generally speaking, outside of some short-term trades on a bounce, I don't like Nvidia a whole lot. All right, last but not least is PLTR, and then I'm going to tell you about how you can learn more about how to do this. I've got some free classes coming up, but let's first talk about PLTR. This is an interesting one because this trend went parabolic. See how I can draw a line that's kind of straight here, and then over time the line gets steeper and steeper and goes absolutely to a curve? When you get a break of a parabolic trend, it's very likely that the stock will pull back to its linear trend line. So if I was to draw a straight line across those bottoms, that's my linear trend line. I started here and I drew it across this inflection point, and then this one almost touched it, and look at how it fell right down to that trend line and bounced. That's very predictable. This kind of thing happens all the time. However, when a trend goes parabolic, it takes a long time for it to break that ceiling. So do not expect that PLTR is going to break through that 125 level anytime soon. And really, we're a long ways away from it. Now, a short-term trader could trade it from 90 to 125. What does that look like? Well, let's take a look at the 1 month chart. And here you can see we've had falling tops and they're giving way to rising bottoms. So this is pessimism and this is optimism. We have resistance here at 90 and we just started to tickle through that on Friday. So I think there's a pretty decent chance we're going to go up from here. But if it starts to move down through 84, take the loss because that's your support zone. So the trade is basically buying in the low 90s for a trade maybe up to 110, 115. But if it fails and it moves down through 83, then jump ship. Now, I said that there was some free classes coming up. This is my website, stockscores.com. Go to the homepage, so just punch in www.stockscores.com, a couple of things to register for. First, free weekly newsletter. I send out an email every week, only one, no spam, and this is where you can learn about the markets, about trading ideas, and so forth. And that's all free. Make sure you register for that. Plus, next week, I am doing 4 free sessions. These are 1-hour classes. The first one is how to read a stock chart. We're going to elaborate on the things that I've talked about in this video. On Wednesday, I'm going to do a lesson on investing, how to use my methods to be a better investor. Some of you may want to be a day trader or a swing trader. That's what these sessions are all about on Thursday. And then Saturday, I'm going to do a session on my tools, my algorithms, all the things that I've built to give me and potentially you an edge in the market. So these things are all free. You just register at stockscores.com, and I hope that I'll see you at some of those events. I hope you've enjoyed this video. Do me a favor, if you have, click the like button. Make sure you're subscribed to the YouTube channel, and most importantly, trade well.